Cathie Wood out with some new comments here today. I want to go ahead and react to this 3-minute clip here, give my opinion, hear what Cathie Wood has to say. Obviously, it was a very tough year for Cathie Wood in 2022, as anybody that's investing in pretty much growth stocks out there. It was vicious, right? And I'm interested to hear her perspective, what she has to say about this market. Obviously, ARK has started to rebound recently, and growth stocks in general, and kind of her opinion and perspective. From there, we will listen to Mr. Jeffrey Gundlach on his opinion about what Jay Powell said today, the Fed said, and his perspective on all this. I'm looking forward to hearing this as well. I had it on in the background earlier, but I didn't really get to listen intensely because I was kind of busy at that time. It was like meta, or there was like a lot going on. So I'm excited to listen to that, and I just want to say thank you every single person that has subscribed to this channel. We are now over 22,800 subscribers now at this point in time. So I appreciate every single person that subscribed to this channel. Thanks for being here, guys. I enjoy this channel and doing these videos all the time. I appreciate y'all. Also, if you're looking to apply to join my private stock group, the private wealth group, the pinned comment down there will be to the application if you're looking to join us in there. Really only makes sense to apply if you have at least $15,000 in your portfolio, or you're going to invest significant amounts of money and you're taking investing very serious. For folks with maybe smaller amounts of money, check out the Patreon. That'll be linked in the description area, and you get to see all the stocks I'm buying and how I build the Patreon portfolio with only $150 each week. All right, let's get into this.
Is ARK Invest CEO and CIO Cathie Wood. Cathie, it is great to see you. It has been a heck of a month. It's been a heck of a 2 years. It's been a heck of a 5 years, frankly. We've been talking sort of about all of it. But also, I know you have some new ideas about what's going to happen this year, and maybe some of your best ones. But before we get to that, I'm just sort of curious your broader context in terms of how you're thinking about the market and how you're thinking about your own performance, both in the January period. We've got the Fed, the backdrop of the Fed is part of that, but also just the larger backdrop over the past couple of years.
Sure. I think what we've been through is a very big inflation and interest rate scare that hit long duration assets incredibly hard, including long-term bonds.
Wow, I don't keep track of ARK's. I have a watch list on my trading view for ARK, but I don't look at it that often. I had no clue ARK hit all the way down to 30. I remember it was in 35, 36, and that was insane lows for ARK, but I didn't know it got all the way down to 30. What in the world? Let's take a look at this here. Let's pull up a 1 year. Oh my gosh. It got under 30 in December. Whoa. I did not know it got that bad. My gosh, I thought 35, 36, maybe 34 was the bottom for ARK. I had no clue it went under 30. That's insane, man.
Last year, the worst performance in the bond market since the 1700s. That's how bad this was. And
wait, what? Did she say the 1700s were? If she did, that's only something Cathie Wood would say. What?
Duration assets. Incredibly hard, including long-term bonds. Last year, the worst performance in the bond market since the 1700s. That's how bad this was. And of course, that was going to...
Only Cathie Wood would bring up some stat like that. The worst performance since the 1700s. How's that even possible? What? That's just crazy.
Really hurt our strategies. But we do believe, and we have been saying for some time, that the inflation is unwinding. We think the market is leading the Fed, the bond market. I think we're down to 3.5% today on the 10-year Treasury bond yield. The bond market is basically saying the Fed is close to the end of this tightening move, and is also saying that inflation will surprise on the low side of expectations, which means when we look back that the past 2 years...
We have a few things going for us in regards to inflation, because I know there's still worries about another spike up in inflation, or what if CPI starts going up again, and those sorts of things. We have a lot of things that are going for us now, okay? Transportation costs have come down immensely over the last 6 to 9 months. I'm anything in transport. I'm talking about if you're shipping something overseas, if you're trucking something, like almost everything transportation-wise is considerably cheaper than it was 6 months ago, 9 months ago, okay? That's something we have working for ourselves. Next thing we have working is commodities went through this insane super cycle like we've never seen in the longest time, okay? And it went through that back in the spring and the summertime. The likelihood you're going to get another commodity super cycle like that is, I would call it like maybe a 1 to 2% probability. It's a possibility. It's about a 1 to 2% probability. You get some crazy super cycle. So that's likely not happening. Third thing is we're going to comp these ridiculous numbers year over year when commodities and everything was in this insane bull cycle, right? And so as we tick on here in 2023, and especially once we get into the spring and the summer, and you got to comp those numbers year over year, oh boy, okay. On top of that, obviously, housing's come down considerably in terms of the rate of increase, and rents are moderating. I wouldn't be surprised. There'll be some markets in 2023 that actually I wouldn't be surprised if their rents actually go down at some points in 2023 in certain markets. Not all of them, but some markets will actually see that. So you don't have a lot to really go off of because it's just a huge worry about inflation, but you just don't have a lot to go off of. Even today, right? Today was a massive bull day in the market. What did commodities do? Down. All of them. Like all the ones that matter, all considerably down.
Inflation issue and interest rate issue has been a function of massive supply shocks to the system. And I noticed that even Janet Yellen this week said that she believes that inflation is probably going to surprise on the low side and stay there and might even become a problem. Larry Summers, same thing. He's saying, wait a minute, the economy is much weaker than I thought. So I think we're close to the end.
So you think Jay Powell is going to, and in terms of the language Jay Powell might use later today, you think it's going to be a little softer rather than sort of a hawkish tone?
You know, I have no idea.
This interview was before Jerome Powell spoke, just if anybody's confused about that.
I don't know. I've been surprised at how unanimously this Fed board has voted, given how weak its own Federal Reserve Bank.
It's from 16 hours ago, and Jay Powell spoke about 14 hours ago or so, 12 to 14 hours ago.
Districts are, according to their own report. So I don't know. I do know that the market is leading the Fed. And I also know that innovation solves problems. And we have a lot of problems now, including the Fed being so tight and activity becoming so weak in so many areas. So, you know, we put out big ideas last night. These are our big ideas 2023. Very excited. And the first one you see there is artificial intelligence, which, of course, ChatGPT has finally caught the public's imagination. We've been working on artificial intelligence for a long time now. And I think some of the things we're seeing are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, every company.
You know, I spoke about this earlier today in regards to Meta earnings. I think Meta is the most underrated in terms of if you want a direct play on artificial intelligence. I think it has huge potential, to be quite frank. Meta's been investing tens of billions of dollars into things in relation to artificial intelligence for quite some time. It's not like it's a new investment for them. They've been investing in this considerably for years now. And so I think that's definitely, and they're continuing to invest. When I say they're investing billions, they're continuing to invest in that. So, you know, what Meta does there is, I think, going to be tremendous as well. So I just think they're one that you might not see as directly an AI play, but I actually believe that they could be one of the companies that makes the most money. Like, who's going to actually make the most money from artificial intelligence? I think Meta could be one of the companies that makes the most. Let's hear what Jeffrey has to say here.
Jeffrey Gundlach. Jeffrey, welcome back. What a day to have you. You know, you tweeted going into all this today, quote, "I suspect Fed messaging will push back against the pivot narrative and thereby current bond market pricing. Should be interesting." He didn't really do that, did he?
He didn't really talk. I don't think he even mentioned the word pivot, frankly. He obviously talked about ongoing rate hikes, but there was just something about his demeanor after he read the statement. He just seems like he has confidence, I guess is what I'd say, and he feels comfortable in where he's gotten to. And I think that everybody kind of sensed that. And he obviously did not fight back against market pricing. He almost waved his hand about the disconnect. Somebody asked him a question about the disconnect between Treasury yields and the dot plot from last meeting. And he just sort of said, well, the bond market, has its own ideas. And it's pretty interesting. So I thought that his demeanor was really the key thing. Remember back in August, Jackson Hole, I think it was, or September, he comes out like Apollo Creed predicting pain for the economy. And, lots of unpleasant outcomes as a consequence of the need to catch up on raising rates. And I didn't hear the word pain at all today. I think one of the reasons that he's confident is he knows, as everybody should know, that and we've talked about this in past meeting appearances, Judge, that the CPI, the headline CPI, is coming down. And it came down from 9.1 to 6.5. What a lot of people don't know, over the last 6 months, the headline CPI has only gone up by 16 basis points per month on average. And if we just postulate that maybe that trend continues and we get 16 basis points for the next 6 months, the June number that would be printed in July would come out at around 2.5 on the headline CPI. And if we come in more at about 30 or 35 basis points, we'd be down at 3 for the headline CPI. So I think he's got a little, he's keeping it under a bushel, but he knows that the CPI is coming down, and he's using the word disinflation. The real question mark is going to be, when will the market start worrying about inflation in the second half of this year? Because it's quite possible that the inflation rate does go back up towards 4% in the second half. We just have such great base effects rolling off, and he's confident of that. He knows it's going to happen. We're not really going to get a bad inflation surprise before the next Fed meeting. And so he was feeling pretty relaxed, and the markets liked that.
Well, something very, very important I need to point out here, okay? First off, I don't want to make an argument back to his worries about inflation in the second half of the year. I feel like I already made that argument like a few minutes ago. Rewind the video if you need to watch that again, okay? In terms of all the things that we have going for us in terms of the worries about inflation that might just not be there, right? But something super important. I talked to you guys in the main channel in my Fed video today, and what did I say? I said, the 1% of the 1%, these folks are watching everything about Jay Powell. They're reading through his code language because he's going to talk in code at some points, and they're going to look at everything in detail. And what did Jeffrey Gundlach just talk about, right? Which I definitely probably put him in the 1% of the 1% category, right? He's talking about how he was viewing him physically, actually, right? His confidence levels and the way he was talking, his demeanor, everything, right? This is what these folks are looking at. And I got to say, I saw the same thing that Jeffrey Gundlach saw. I saw a very confident Jerome Powell for the first time in quite some time today. A man that looked like, we're starting to actually win this game. He, in the kind of Jackson Hole time, he looked like a very defeated man. He looked like a man that was losing the game bad, and he was very, very scared. Today, he definitely looked like a very confident man, and a man that was sure about kind of where things are going and what's happening here. He even started bringing up soft landing again and those sorts of things, right? And so this is a man that's looking at the economy, and he's like, okay, we're starting to see weakness in employment sector, but it's not a disaster. We're seeing some weakness from company earnings, but it's not really a disaster overall, right? S&P earnings look decent as of right now. And meanwhile, we got inflation coming down more and more and more. And if you look at real-time inflation data, right now we're looking at something in the 5s from what I see from Trueflation, for example, right? And so I think ultimately at the end of the day, that means the most confident he's been in a considerable amount of time. Probably in maybe a year, 9 months to a year is the last time, you really get to see Jerome Powell this confident. And so, this is what I talk about. People are in, the 1% of the 1%, they see everything. They watch everything, man. They're gonna listen to every single word. They're gonna decipher those words, figure out what they actually mean, speak in code, and watch everything, including physical appearance and the way folks talk.
Are you surprised? Are you surprised? Because, the people that I've spoken with to this point, really are hanging on this idea of this pushback against the financial conditions loosening, right? The market's rallied. There's a lot of the high beta frothy stuff that's rallied. He could have, he didn't.
He didn't. That's right. And it's pretty interesting because, last year was so challenging. And we talked about in September that bond yields were going to peak in the fourth quarter and that markets were going to reverse in the first part of this year. And I expected risk assets to do well during January. And of course they have. It's odd how people don't really always factor in flows in the way they think about the turning of the year. Last year was so bad that we had tax loss selling all over the place. And so there was no liquidity to buy anything. And so the market was having a really hard time. And now people are buying things back. And now you're looking at your statement and you've got big numbers. You got the S&P up 8%. We've got the long bond, the treasuries up 9%. We've got emerging market equity up 11%. So unfortunately, I think that we've gotten a lot of return already for the first part of this year. And as we move forward a couple of months, I think we're going to start getting overvalued because I think this inflation narrative, it is so supportive of markets. We're almost, I almost thought that Jay Powell was going to use the word Goldilocks at one point. He seemed so comfortable with where he was. Weird how he, at the same time, had this aura of relaxation, and yet he did still talk tough. Jobs not done, jobs not done. We have to raise rates more. We're not going to stop. We can't stop too early. But for some reason, the mood sort of trumped, and that rhetoric just didn't seem to have the teeth or the intensity that he had last fall. And I think the market was relieved to see that.
Yeah, 100%. And sometimes I think some of these Wall Street folks, I don't know what they wanted Jerome Powell to do today. Did they want him to lie? Did they want him to say, we're gonna raise rates like crazy? You just wait. The economy's going to be devastated. You're all screwed. Like, what did they want him to do? Like, seriously, what did they want him to do? The man basically said 100 times, well, the job's not finished. We're going to remain data dependent. He talked about even future rate increases. Like, what did they want this man to do? Like sometimes I listen to these guys and I'm like, and Jeffrey Gundlach I think was pretty good as being kind of even keel there. But a lot of these folks talk like they wanted him to just come out and smash this market, wreck everything, lie. What for? Should he just start making his speeches based upon what the stock market thinks? I don't think that's good. The Fed has two jobs. It's to have maximum employment, okay? And it's to keep inflation in check. And that is their two main jobs. That's their two jobs, okay? And so their job is not to tell the stock market, go up, go down, we want you to do this. No, okay? So, for them to want him to do all this other stuff, it's like, that just would give even more of a negative narrative about the Fed. And they're trying to do things to help or hurt the stock market, which isn't good, okay? So that's my opinion of that. I appreciate everybody joining me for today's video. 22,800 plus subscribers now at this point in time. If you're looking to apply to join my private stock group, the private wealth group, check out the pinned comment down there and see you in there. Much love and have a great day.